let me bring on our next speaker, Marcus Featherston. He's a director. Oh, there he is. Spoken into existence. He is the director of operations at Eightcap, Australian-based broker. They cut their teeth in the Forex game, now in crypto. Marcus, I won't say good morning because it's not morning for you, but
not quite.
Happy Tuesday, and thanks for coming on today.
Cheers. Thanks, Spencer. It's great to be here. Really excited to come online and have a chat about crypto derivatives and Eightcap's new offering that we're getting online.
Let's bring it on. I think we have your slides. Let's get them up on the screen and let's get into it.
Awesome. Yeah, let's get straight into it. So as Spencer said, my name is Marcus Featherston. I'm the Director of Operations at Eightcap. I deal with everything relating to trading products, liquidity, and risk at Eightcap. For those of you who don't know, Eightcap is a regulated derivatives brokerage headquartered out of Australia, established in 2009. But over the years, we've managed to develop more of a global presence. And now we have offices in London, Cyprus, Bulgaria, and Guatemala as well. As Spencer said, we're traditionally based in FX, commodities, and index markets, but we've had our eyes pretty keen on the crypto market over the last year or so, and we've put together a pretty good offering that we think can really cater to the current space when it comes to crypto derivatives. So when it comes to this market, I think the best way to analyze the current state of crypto products and what's on offer for investors and traders is the crypto pyramid. I usually hate saying the words crypto and pyramid in the same sentence, but I couldn't think of a better structure in order to sort of get my thoughts across on this. So I think largely what drives cryptocurrency trading and investment over the last 10 years has been this bottom tier of the pyramid, which are the hodlers, the fundamental traders, people who really see the paradigm shift in cryptocurrencies. So they're putting the money into cryptocurrency, they're buying coins, storing them in their wallet, setting and forgetting, and are waiting for the paradigm shift to happen. And this really comes from a place of ideological belief. I myself was very much involved in this for a number of years, and I think the thing that really stopped me from wanting to put more funds into cryptocurrency was a lack of technical infrastructure. So I wasn't really able to see a reason to put more funds into crypto. Then fast forward 5 years, and all of a sudden the question isn't why should I, but why shouldn't I? We've seen this next tier of the pyramid grow with so many more investment products, vehicles for crypto traders to diversify their portfolio come into play. These are things like DeFi protocols, staking pools, non-fungible tokens, layer 2s, and just a variety of technology that we're seeing even outpace the traditional financial markets. And in that, I think we've seen these products grow from these bearish markets. In a time where you're not making a lot of money in the underlying spot market and there's a lack of growth, I think we've seen technologists and investors come into the market and have to innovate and adapt to what's really present at the time. So we've seen this great technology come into the space, and from that, the top layer of the pyramid gets created. Who are these people? Well, they're the technical analysts, the day traders, and the futures traders as well. These people aren't looking at things in terms of years or months. They're trading on the minute chart, the hour chart. Maybe they have algorithms. They're really trying to, I guess, take a more short-term approach to trading. And there's never been a better time to do this than when you're in a swing market or when you're in a bear market. When the market's not going in your favor on the underlying cryptos, you're going to come in and take advantage of these swing movements. And in that, I think the product that we've seen quite ripe for this space are crypto derivatives. To the point where we're now seeing crypto derivatives trade at 5 times the volume of the underlying market. So for those who aren't aware of what crypto derivatives are, these are contracts that allow you to take a speculative position on the cryptocurrency markets without having exposure to the underlying coins. The advantages of this are that you can trade on leverage to protect your capital and trade with less margin. And you can also take positions going long and short in the market as well. The advantages being that if you can take positions on both the long and short side, then in a swing market, things are looking pretty good. If you're holding positions in underlying coins in your wallet, it doesn't make a whole lot of sense to come into the spot market and only take advantage of the long side of the market, especially when things are volatile and uncertain. I think during these volatile periods, we're going to see traders more so put their underlying coins into staking pools and earn consistent returns in that space. And meanwhile, using less capital due to margin and leverage trading, they can use crypto derivatives to take advantages of these swing movements that we're seeing happen. And I think we're going to see more prevalent as, crab seasons, as they've been dubbed by analysts, come into play in the crypto space. So with this crypto derivative growth happening, I think we're more so seeing this grow in the unregulated space. Onshore, we're seeing a lot of regulated derivatives brokers offer a very lackluster offering, in my opinion. You know, there's a few cryptos on offer. There's quite limited leverage. The spreads are quite wide. But they do offer a vast level of security in the sense that they are a regulated body. Meanwhile, when we look offshore, what we're seeing is all of these exchanges come in with a great product offering, you know, hundreds of instruments, you know, great spreads, but they're offering this in a very, I guess, insecure way. We're seeing a lot of issues occurring in this space with many large exchanges pulling out of regulated areas such as Europe, Japan, and Australia. I won't name any names. I'm sure you can just Google that and instantly see sort of who some of the players in that space are. So there's quite a disconnect we see here at Eightcap. You know, we see all these regulated derivatives providers give security to traders, but not really any good trading conditions or products. Meanwhile, offshore, there are all of these products running rampant, which traders want to take advantage of, but we're seeing not a lot of security in that space as well. So we've been sitting on the sidelines for a while at Eightcap, analyzing the crypto space, wanting to get involved on the derivatives side. And I think we've put together a solution that tries to find a best of both worlds outcome for this offshore versus onshore, regulated versus unregulated debacle in the product offering of crypto derivatives. So being on the sidelines and coming into the space, you know, what we're seeing, or what I was seeing as a crypto derivatives trader who's in a bit of confusion over what direction to go in, is there's so many opportunities for liquidity to price these products. We're seeing a lot of really great DeFi protocols that are not using traditional order books and using these great Oracle protocols. We're seeing a lot of legacy crypto exchanges offering liquidity, and even a lot of institutional legacy liquidity providers in the FX space come into crypto liquidity as well. So there's all these pools of liquidity out there. And as someone who's pricing these in for traders to use, you think to yourself, well, which one are we going to use here? And being a greedy person, I just said, why can't we just use all of them? And so what we focused on here is the development of off-chain OTC transactors. Now, a lot of jargon, I'll just put that in layman terms. We're pretty much taking all of this liquidity that's out there in all of these different sources that are usually quite separate to each other, and we're really aggregating it together. So what that delivers to the end trader is more accurate pricing that better reflects all of the movements that are happening in the market, as well as pricing in much more accurate swap rates, much more accurate funding fees, and being able to really offer the best trading product all round that we can, and the best pricing and greatest depth of order book as possible. In doing so, we want to create a regulated leverage derivatives trading option for crypto traders. What does that mean specifically? Well, we want to be able to offer segregated client funds. We don't put them in with our operating fees or operating funds. Usually when clients deposit to these offshore crypto brokers, you don't know where your coins end up. You don't know what wallet that ends up in. Sometimes these operators pass those on to their own liquidity providers. And if there's an issue downstream, then you're the one who's left really holding the bag in that situation, and you don't really have an opportunity to get your funds back. So we want to be able to offer great fund security for clients. We want to offer AML compliance, KYC, regulatory compliance as well. And really, in that sense, give people a variety of fiat on and off ramps for their funding at the same time. So you can have a variety of funding options. We offer security on that. And we see just a much more secure trading environment for people that are a bit more wary of these, you know, offshore derivatives exchanges along those lines. And I think the really important thing about our crypto derivatives offering is that we really want something simple here. In the offshore world, we're seeing a lot of inverse synthetics, we're seeing perpetual swaps, and these are quite complex products for the entry-level trader to understand. You know, even myself, someone who's been in the derivative space for a while, I'm going on these exchanges, they have funding rates charged every hour. We see inverse synthetics being re-indexed daily, which has shifts in your P&L. And it's not a simple product for you to come in and trade and just look at the market and trade the market in front of you. There's all these other factors that you, as a trader, have to take into account. And it just doesn't allow for a good user experience, in my opinion. So what we're offering here is a very simple tokenized crypto product. It's easy to understand. You enter the contract. If you're in a buy trade and the market goes up, you profit. If the market goes down, you're in a loss, and vice versa for a sell trade. So I think this simplicity is really going to allow us to offer a great trading experience to entry-level traders, as well as a very easy switch over for people who are used to trading more complex derivatives products on these exchanges. So I guess just in summary of what Eightcap's trying to bring to the party here in comparison to other players, we're seeing a lot of other people in the space charging high commissions on perpetual swaps, in offshore exchanges. Onshore, we're seeing brokers only having 5 to 10 cryptos maybe, and very lackluster leverage that doesn't give a lot of opportunity or breathing room for clients to take advantage of. We're also seeing very marked up spreads. A lot of other plays are offering Bitcoin spreads from $50 USD or more per contract, which is a bit ridiculous in my opinion. We're seeing very low partner revenue splits as well. It's not something that we really see as engaging in the trading community very heavily. And we're seeing quite a basic platform offering at the same time, only offered on a native platform, not a lot of functionality given to traders, and no index pairs or index markets offered as well. So what Eightcap is coming to the party with is 250 plus tokenized crypto instruments. We're offering 5 crypto index markets as well. That's something that excites me a lot because you can take a position on individual segments of the crypto market in one instrument. You don't have to come in and trade multiple coins or various contracts if you have an opinion on a certain segment. We're offering things, we're offering index markets based related to DeFi coins, related to altcoins, related to the top 10 cryptos by market cap. So you can come in and if you have opinion on a specific segment of the market that maybe doesn't correlate well with other parts of crypto, you can take a direct position in it very quickly on these crypto index markets. We're offering 24/7 trading. And a really cool thing that we're announcing right now is we're actually integrating with TradingView for both charting and trading at the same time. I'm a big fan of TradingView. That's where I do all of my trading. Eightcap does offer its own platforms on MetaTrader 4 and MetaTrader 5, which are good industry-grade solutions, but a lot of the crypto traders are on TradingView, so we'd rather go to where the crypto traders are than have them come to us necessarily. So that's something we're very excited for. Another really unique part of this offering is that we really want to have an industry-leading partner program. Eightcap really prides itself on its partner relationships. Most of our client base is based through partnerships. We have a lot of great relationships with people in the trading community and educators. At the end of the day, exchanges, brokers, we don't operate in a vacuum. We really are made up of the traders that want to engage with us. And trading really these days more than ever is a community, and crypto more than any other one with the online, the Discords, the Reddits and the forums that have grown in the space. So we've created a very competitive partners program that allows us to reward community members, influencers and educators for referring traders over to us. And I heavily recommend going to 8cap.partners and getting in contact with our team directly. And we can offer very flexible deals and arrangements on our partnerships. Getting onto the product side, we're coming into this with very competitive spreads. We're up to, I did a calculation yesterday, over 90% cheaper than a lot of our onshore competitors. And adding even further value to this, it's completely commission free. We're not adding any other funding charges, hourly funding rate, re-indexations or anything to these products. So you can really come into this commission free, just trade the spread. You know how much it's costing you on face value and get into the markets. On the leverage side, we've taken a bit of a Goldilocks approach here. We're not looking to come into the market and offer 1 to 3 or 1 to 5 unless regulation requires it. Just to give clients a bit more breathing room, we don't want to come in and offer 1 to 200 and allow clients to take on too much risk, especially if they're inexperienced with using leverage on their accounts. We're seeing a lot of offshore exchanges do that. So we've come into this starting off with 1 to 20 leverage, which we see as a good middle ground here. So, look, I'm not going to harp on about the offering a whole lot longer. I'm really keen to get to the Q&A and see a lot of the questions that traders can bring to us on the offering or on crypto derivatives. I'm a crypto derivatives trader myself, so I'm always keen to talk strategies, indicators, algorithms, and things like that as well. At the end of the day, we see crypto derivatives as a space that's here to stay. It's only getting bigger. There's a massive disconnect between a lot of the offshore exchanges and onshore brokers, and Eightcap's here to bridge that gap. And we're really excited for it, to be honest. So, look, I'm probably just going to leave the presentation there, but I'm really keen to jump into the Q&A if traders and crypto heads out there have any questions.
Yeah, Marcus, I'm not sure what this says about the industry that 20-to-1 leverage is actually like on the conservative side of things as far as like in terms of maximum leverage on your platform. Can you outline your philosophy as to why you offer 20-to-1? Can you speak a little bit more about that? There's a lot of leverage in this industry, a lot of leverage, and people can do scary things with it. Can you just speak a little bit more about the leverage on crypto derivatives? How you use it maybe could be helpful, and how you see most of your clients using it?
100%. Look, that's a great question, Spencer. I always say with, great leverage comes great responsibility. Leverage is a trading tool. It's not meant to make or break your trading. It's something that's meant to be a tool that's used in your trading. In the same way I use an indicator or I use an algorithm or something, I see leverage as a tool that you have to understand and train your mind to use. You're not meant to just come in and take a bet on the crypto market at 200 to 1 leverage if you don't know what you're doing. So if you are new to crypto derivatives, if you're new to a lot of derivative products in general, I recommend really educating yourself on how leverage works in that sense. Now, there are a lot of players out there that are offering 100, 200 to 1 leverage. That can be quite dangerous if you're inexperienced. At the same time, I think when you're taking a derivatives position and brokers are offering you 1 to 2 leverage, the appeal to get in and take advantage of these swings is quite limited. So in offering 1 to 20 to clients, I think it's trying to give people breathing room. In no way, I'd never say to people come in and max out that 1 to 20. It's just to give you room so you can enter the crypto market with less capital at hand. And if you know what you're doing and you're educated, you can use that to your advantage. And like I said during the presentation, I think during these swing markets that we see becoming more prevalent, we're going to see more people want to protect their underlying portfolios and their wallets by staking that in pools and earning consistent returns there. But there's no reason why you can't then jump over into the crypto derivative market and take positions there on leverage and use less margin in that space. And I think that's a big thing we're trying to really sell at Eightcap is, derivatives, they're what we call an and product, not an or product. We're not saying to people to come in, use all the leverage you can, buy Bitcoin and, see it go to the moon, as much as, there's a lot of enthusiasm for that in the space. So, yeah, I think it's about giving people breathing room, them knowing what they're doing, and, giving them the ability to take advantage of these swing markets as they come about in the crypto space.
Yeah, I think the summary is that leverage is not a bad thing. It can be a great thing if you use it correctly. If you use it incorrectly, you can get hurt. You said $0 commissions, no commissions. Explain then how you make money. What is the catch? How is that possible?
Sure. So obviously we, are out to make money. We're a broker at the end of the day. It's what we do. So we're not looking to charge direct commissions to people, but more we would take this out of spreads and any rollover charges and that we offer clients in very small markups there. So, but in saying that, it's still quite more affordable than a lot of onshore competitors that we see. As I said, our spreads are about 90% cheaper than a lot of competitors. So even if we're taking some money out of the spread to earn revenue for ourselves, you're still as a trader much better off trading with this 8-cap offering than some of the other players out there. Likewise, we're not charging hourly funding rates or re-indexation fees. We charge a once-a-day swap rate, which we're continuing to reduce over time because swap rates in crypto don't make a whole lot of sense to me, but I think we can get a lot more competitive. And even our swap rates right now are about, I think, 80% cheaper than a lot of competitors out there. So to answer your questions, we make money on the swaps and some spread markups. But at the end of the day, even with those, we're still looking pretty good compared to a lot of the competition out there, Spencer.
What made you get into the crypto derivative space in the first place? Considering the fact that you're in different markets, as you said, you've got offices around the world, and it's a very complicated regulatory landscape. And the European Union versus Australia, I don't know how they're different, but I'm sure they are different. So I guess what made you get into the space in the first place?
Well, we've always had a small exposure to it. We've had the generic, top 5 cryptos, very small leverage, and not the best spreads for a very long time. And I think it just came down to a personal interest and a lot of interest of our clients and people in the company. A lot of us traded crypto ourselves. A lot of our clients had an interest for it. They're always asking us, why don't you offer this or why don't you offer that? In fact, I think the conversion from FX and index markets over to crypto actually makes a lot of sense. There's a lot of, I guess, educators and influencers in the space that were originally in Forex and that they moved over to crypto. And I was chatting to one recently, actually, and it really mirrors my own experience because I was asking him, why have you made this move over to crypto? Is it just because it's trendy or it's flavor of the month? Yeah. And he pretty much said to me, he's like, well, a lot of the fundamental and technical trading that relates to Forex is obeyed better in crypto. And I've seen that exactly myself. I think we were seeing post a lot of the highs in May, like take Cardano, for example, we're seeing it go between $1.20 and $1.40. And in these pricing corridors, it's just obeying the technicals more than I could say traditional index markets, shares, or Forex does. So in one sense, it's a natural progression for our own traders.
Yep.
But it's something we're enthusiastic about ourselves. I trade crypto derivatives, and I guess our want to enter this space came from our own clients wanting it. And me, like I said in the presentation, looking at the onshore examples and the offshore ones and saying, there has to be a good midpoint here. There has to be, a meet in the middle scenario. And that's what we're trying to come to market with.
All right. Marcus Featherston, Director of Operations at Eightcap. Marcus, thanks a lot, man. Learned a lot.
Fantastic. No, really great to be here. Thanks for having me on.